Report. I'm Scott Wapner. Front and center this hour, stocks in the second half as the strongest month of the year gets underway now. We're trading it with the investment committee. Joining me for the hour today, Josh Brown, Joe Terranova, Stephanie Link, Jim Leventhal. We will go to the markets here, give you a look at where we stand at 12 noon in the East. Bit mixed today. You do have the Dow jumping by about 1%. We're a little bit of give back on the NASDAQ, too. And, Joe, I think that's a really interesting characteristic of this market today as the second half gets underway. A bit of an unwind from some of the momentum names that have run a lot. A lot of the big winners, like the Netflixes of the world, are down 4%. Some of the AI power names, which have run a lot, are down. It really seems to be pretty distinct today, the selling in those high-flying names.
All right, let me try and explain why that occurs. At the end of the second quarter, there was a very strong push in the direction of the leaders. Classic end-of-quarter portfolio window dressing. First day of July, first day of the third quarter. Now it's all about the laggards. I mean, Steph and I were just like, you have names. You have Best Buy. You have Target up 6%. Those stocks are both down double digits on the year. In healthcare, you have Merck, which is up about 3%, down double digits on the year. Lululemon making a comeback today. The Trade Desk making a comeback today. Financials, the one bank that hasn't worked all year, USB, that's higher today. And Jimmy's really excited about this. You have the Russell up over 1% today, while the S&P and the NASDAQ is down.
You know,
laggards day.
Jonathan Krinsky has a pretty good note out today talking about the unwind, Steph, in momentum and how things like discretionary, which, you know, was the worst sector year to date thus far, is going to have a catch-up trade. One day makes nothing, obviously. But you have had a run-up in so-called lower quality, higher beta names. And if you do have an unwind in that trade and you do have a reversion into some of the laggards, it could get a little interesting in this market.
Oh, it'll get very interesting in this market because broadening out is very, very healthy, right? And so, to me, look, at the end of the day, we might have these fits and starts between growth and value, momentum and lack of momentum, but it all boils down to earnings. And if you believe we're growing at 2.5% in GDP, 2.5%, gotta go.
Hang on 2 seconds. I want to get that news out. Back to you. Broadening obviously would be good and what a lot of people are waiting for and tired of a top-heavy market.
Right. So I think overall earnings are going to be good at about 8 to 10%. I think that's going to positively surprise for the year. Expectations are for about 5%. Top line growth, mid-single digits, margins expanding. In the first quarter, we saw margins expand 61 basis points, but it was mainly the Mag 7 that drove the margin expansion. So can you imagine if we start to see a broadening out, better results? And I think of the groups that I like, I mean, I still like tech and industrials, but financials to me are it's my favorite sector right now because they're the cheapest. And I think
even at a record high,
people are not giving credit for deregulation, and we are seeing it in spades.
Yeah, that was Mike Mayo notation yesterday.
Yep, we had the stress tests on Friday. We're going to get the SLR relaxation. IPO rules are going to get relaxed, and then you get M&A, and then you get capital markets, and the valuations are still cheap. You asked about discretionary, and by the way, financials and discretionary is about 23% of the S&P 500. So if they get going, that could certainly help the overall broader averages. But discretionary is interesting because I was starting to worry about the labor market. I was starting to worry about the weekly jobless claims. And today we got a JOLTS number that was better than expected, quit rates that were better than expected. Initial claims last week were a little bit better than expected. So jobs, wages, little lower inflation. You can make an easy case to own discretionary that is absolutely lagged.
Josh, I'm going to go to you. July is the best month over the last 20 years. The S&P has been positive for the last 10. The setup looks pretty good as BCA upgrades stocks today. Now, they're only at neutral, in fairness. They downgrade cash to underweight. And you do, according to Bank of America, have the biggest net selling of equities in some 10 weeks. What do you make of all that?
Look, I think there were three things that kept people cautious this March and April, myself included. Just people saying, all right, this doesn't feel like it's going to be as good a year as 2024. Those things were softening of the economic data, which has partly reversed, partly not, but certainly the wheels have not fallen off. That was one. Two, the Rose Garden moment, which was absurd and was reversed as well. And then three, this concern about what earnings would look like with any kind of tariffs interfering with the cost of doing business. And we have largely been able to put those items behind us. We don't have an economy that's grinding lower or slowing down by any means. It's not as fast as it was, let's say, in 23, but it's not as slow as we thought it might be in
Josh,
March and
forgive me.
April.
I'm going to take it from you again. I'm going to take the ball from you. I'll give it back in a moment. I just want to get back to Emily in the halls of Congress for us following all of that. It's interesting to see the move in the bond market. And I'm just wondering, Josh, I'm just going to make you pivot for a moment to react to all of this as it's developing. Can we put that back up, please, of the 10-year or whatever you had up there, please? There it is. Whether you think the bond vigilantes are going to have the last word here, or at least want to have a little bit of yell before things calm down in the Treasury market.
That could be, and perhaps that's a headwind that we need to think about, and perhaps there will be a day or two where a spike in the 10-year gets the attention of the stock market, and there's a little bit of puke as a result. But I really don't think that that's the main thing. I think the much more powerful trend that's happening right now is the weakness in the dollar. And one of the points I wanted to get to before we went back to Washington is that one of the things powering investor portfolios forward this year is international stock exposure. I haven't been able to say this in a while. I looked at my own 401k yesterday, and I had to refresh the page because I thought there was an error. I'm doing double the performance of the S&P in my retirement account, and the reason why is 40% allocation to international stocks. You're talking about a gigantic asset class that's been a drag year after year after year. We're coming off one of the most incredible spades of performance for international stocks, almost every region. And this is really important for investor psychology. They no longer are just looking at the SPX and saying, all right, a lot of my portfolio is doing well. They're making money all over the place. Through Friday, international stocks were outperforming U.S. stocks by 12.6 percentage points. That's the widest gap in 24 years. 2001 was the last time we saw anything like that. When you look at the effect of the dollar, which I think, again, more important than the bond market at this current moment, if you strip that out, international stocks are still up 11% year to date. So, yes, it's in part a weak U.S. dollar phenomenon, but there is earnings growth all over the place. We talked last week about South Korea. European countries have earnings growth again. It's a miracle. So it's great for investor psychology when they're making money, not just in the U.S., not just in the NASDAQ or the mega caps, but they're making money throughout their portfolio. And that's the case right now, and I think it's a big positive.
Jimmy, it's going to be worthwhile watching that dollar. The move lower to start the year, which is the worst open to a year in decades. There's some talk today questioning whether the dollar move is bottomed. Now you have to pay attention to that. The bond market, do you want to weigh in on what you think now that this bill has at least passed the Senate? Of course, it's going to go back to the House. Don't expect much of a roadblock there, but you never know until it ends up on the president's desk with his signature on it in Sharpie.
Yeah, I mean, there's still a lot of sausage making to be done, as the expression goes. To answer your question directly, the 10-year at 427, it's right there. That's fine. I mean, look, on a day like today, the markets are soft a little bit, but there's a little bit of divergence, a little bit of broadening out. It gives a chance to sit back and say, what really matters here? I'll tell you, the 10-year Treasury at 427, Scott, makes me feel good, makes me feel I can look right past it. I do want the dollar to start coming back. And that leads into where my head is as I can sit back a little bit and look at the broader picture. I'm glad we've got the budget bill getting to a conclusion, but we got to get trade deals done. I don't think any of the four of us have mentioned that yet. We got to get some trade deals done. And I was looking just before you came to me at one of my favorite stocks. You know, it broke my heart to sell General Motors. I had to sell General Motors because of all these trade ramifications. Now I start to think, with the stock up 5% today, that maybe what the market is sussing out is that when we get the rules of the road done in terms of where people are supposed to set up factories, that a company like General Motors can adjust to that and shouldn't be trading at 5 times earnings, that maybe those earnings themselves are depressed and going to be higher than expected and should get a higher multiple. I need to take another look at General Motors, but my point being is that a lot of good things can come together. I don't like where the dollar is, just to answer your question directly. I do like where the 10-year Treasury is. I like that the House and the Senate now have to come together.
Why are you in love with where the 10-year Treasury yield is?
Because it's the sweet spot. It shows that the Treasury market is saying two things. We've got growth ahead, but it doesn't look like it's going to be hyperinflationary. It doesn't look like the deficit's going to get more out of control. Nobody likes where the deficit is. But the combination of the deficit impact from this budget bill, granted its final form still needs to take shape, that combination with tariffs looks like it's going to be neutral. That's what the CBO said a couple of weeks ago.
It's also suggestive that the Fed is, Steph, in no rush to do anything, as Chair Powell reiterated today in Portugal. What's interesting, too, Goldman raises their 2025 Fed rate cut forecast to 3 from 1, September, October, and December. And it's because the tariff effects have been smaller than we expected. That's what they say. Those are their exact words. Whether it remains so, we'll see. But Jay Powell's already said, if not for the tariffs, he'd already be cutting rates. So, you know, he's got his finger on the switch, so to speak.
And that was the bright spot from his speech last week, and he reiterated it today, too. So we now just have to wait and see, just like he's waiting and seeing. I think they're behind, Scott. I think they should be doing it, but that's not my call. That's their call. So the point being is, after his comments last week, I thought July was absolutely off the table, but September also likely off the table. And I actually think September is a real possibility now. I don't know if we're going to get 3. But by the way, I don't think we need 3. I think they should be doing it, but I think this economy has been resilient. I mean, 2.5% in GDP, and inflation, it's coming down.
Well, you do get the so-called, you know, the deadline, if you believe that it's a real line, on the tariffs before the next Fed meeting. As well.
Hopefully.
So let's see how it plays out, and whether, you know, even as far-fetched as it might seem to some, if July ends up being live in any way.
I think September 18th is when we'll get the first cut. I like that he gave us some form of guidance last week as it relates to his thought process with inflation. He said, okay, the inflation's going to show up in June and July. I don't think it's going to show up in June and July, actually, and I think that's going to be the reason why they are going to be cutting rates in September on September 18th. I thought auto sales were interesting. Auto sales representing the clear premise that there was a pull forward in demand, and that obviously has dissipated, and I think the same type of effect will be seen throughout the summer. That's why I'm not expecting an inflation spike.
Notable, too, Josh, today, despite a little bit of give back in the NASDAQ, as we said, it's underperforming, which you haven't been able to say all that often lately. UBS says tech stocks have more to go, despite all-time highs. Dan Ives says you can get another 10+% in the second half with the tailwinds of AI. NVIDIA on the doorstep, or certainly walking up the sidewalk to the doorstep of $4 trillion in market cap. Meta hit a record high this week. Microsoft's 14 all-time intraday highs in the month of June. That's the most ever in a single calendar month.
Yeah, look, there's no question that technology has dominated the leaderboard this year. You look at the top 20 year-to-date performers through the first half, 6 of them are tech, but then when you look at like another 5 of them, you could kind of say are tech. Right? Like there are consumer discretionary names that are basically tech companies, or you got companies like Uber that's considered an industrial, but it's an app-based business. So tech is all over the place. 84% of S&P 500 technology names are above their 50-day. 68% are above their 200-day. So more than 2/3 of the index in a long-term bull market. Almost all of these names are in a short-term bull market. And then when you look at RSI, you really have a situation where 52% of tech names are at an RSI 60 or greater, which is confirming these uptrends, which means the accumulation is coming along with these higher prices. People are buying them up. The lowest RSI in S&P Tech is PAYC. I never even heard of it. Is that Paylocity? That's at a 42. Most of these names are buyable. And when you think about the drivers as to why, it's earnings. These companies are growing their earnings at a faster rate in general than the companies in most of the other S&P 500 sectors. This is not happening in a vacuum. It's not like investors are waking up every day and saying, oh, let me just bid for the same group of stocks for no reason. They're buying companies that are coming in with better than expected numbers and raising the bar. And until that stops, Like, until we get to an earnings quarter where all of a sudden you've got a lot of companies disappointing, it can and will continue.
The wild card in all of this is Apple, which had a bad first half by anybody's scoring.
I don't think so. I read the Apple bloggers; they're disgusted. This is not a positive development. Maybe it's making lemonade out of lemons, but the idea that the largest, most well-capitalized, most innovative technology company on planet Earth is missing this moment and doesn't have a way to put their imprimatur on a GPT, general purpose technology, mega wave, like what else? What are you doing? Like smaller AirPods? So I'm a shareholder. I'm a long-term fan and believer in Apple. I just I don't think this is a positive. Maybe
but, I mean, you just
maybe
said,
it's a relief rally. I don't know.
You just called it the most innovative tech company on planet Earth. I mean, there are some who would just take issue with that statement in and of itself. Were they?
Well, they can't. Well, no, they can't, because the App Store is the most valuable.
Would, like, literally,
the App Store
if you thought Weiss was choking yesterday on live TV, I don't know what he would do today at that statement. And Kovac can even weigh in on that too. If, like, the only knock, frankly, on this company from the naysayers has been the lack of innovation. They're never first with some innovative thing, but they end up being the best.
Yeah, and also
innovation doesn't always mean first.
Hold on a second.
Sorry.
I'll get back to you. My bad. Kovac?
Yeah. I mean, look, I take it a different way than Josh does. I mean, looking at, they're going to be actually able to ship this. And I go back to, again, my example of Perplexity and Copilot, especially Perplexity. No one's criticizing Perplexity for not building their own AI systems in-house. They license it from Anthropic and from OpenAI, just like Apple is supposedly going to do. And no one's knocking down Perplexity for that. In fact, everyone's saying Apple should go out there and buy Perplexity. So I see it a different way. They're looking at technology that works. Yes, it's an admission they couldn't do it in-house. Maybe one day they actually get there, but they can do it and do it in a less capital-intensive way and do it in a way that can actually ship this thing on time, because the last thing that they need to do is have another embarrassing delay like they had this year and have another WWDC that's kind of a lackluster AI event while everyone else is pushing forward there.
Josh?
I agree with 100% of what Kovac just said, but that wasn't the question. So the question was, is that the thing that kickstarts this?
Yeah.
No, it's not. It's a good solution for the problem that they have, and I think Steve's right. Like, this is way better than another false start with their own thing that ends up being a bust. Like, this is, that's why I said it's like making lemonades out of lemons, but it's still lemons. And no, I don't think this is the thing that takes Apple to a new high. So better luck next time. Maybe they'll get the robot thing right, because they missed this. They are not a significant, meaningful player in the LLM ecosystem. They may someday become one through partnerships, but that has not historically been what Apple has done. What Apple has done is they've looked around and they said, okay, this guy started this company started that. Here's literally the best version. Do they have the best version of AI-enabled chat? Do they have the best chatbot? No, I don't even think they have the fifth best. So that's the answer to your question. No.
All right. A new addition. It is HLT. It is Hilton. Why?
Yeah, so this is a potential breakout. It's not quite in progress, but it's getting very close, and I thought I'd spotlight this. Basically, we saw a golden cross happen as the stock climbed out of its Liberation Day lows. Hilton was in a 24% drawdown. Now it's back to within 4% of 52-week highs. Got that 50-day crossing back over the 200-day. Look, the sector itself, leisure, lodging, travel service industries in the S&P, every single name, with one exception, is above its 50-day. The sector is just absolutely on fire. We talked about the cruise lines the other day. And Hilton should follow through here. The last earnings report was very strong, 6% adjusted EBITDA growth, $300 million in net income, a 7% pipeline increase, and $927 million returned to shareholders during the course of the quarter. Full year guidance looked great, and that's why the stock's working. So I think the 270s is where traders want to watch for that trigger. If it can get through the 270s on convincing volume, I think it's a pretty good setup, and I would effectively use the 200-day moving average as my risk management. It's like low 240s, let's say 242, 243, and each week I would basically move that stop loss up so long as the uptrend continues.
Do you have a thought here, Joe?
Looks good. I agree with Josh on Hilton. I think Marriott has a very similar chart. Both balance sheets are in good shape. In the past, the ETF has owned Marriott. I don't believe it would ever own Hilton. But if the momentum continues, certainly they qualified as candidates to be included.
All right, let's talk about more second half forecasts. BTIG has one today. The top stocks, or their top picks for the second half: Starbucks, Fiserv, Capital One, Snowflake, AppLovin, and Expedia. On that list, Joe T has Capital One, AppLovin, and Expedia.
Of those three names, I like Capital One the best. I like Steph's point as it relates to the financial sector. I think the financial sector remains strong for the remainder of the year. Obviously, with Discover, that conglomerate now is one of the largest competitors, the Visa and MasterCard as well. So I think Capital One is the one name I would look at. AppLovin, little suspect in terms of the way that it is traded recently. Never really, despite the market rallying so significantly, ever able to take out its February highs. At Expedia, that's really been underperforming for us, certainly relative to Booking Holdings.
And you think it still will?
Yes.
Because, I mean, look, this is emblematic of today's trade. Laggards to leaders.
Yes. Yes.
And you just think it's a one-day phenomenon?
I do. I think
positioning.
I think Booking Holdings clearly is in a much better position.
All right, Snowflake, Steph, we mentioned on the list.
Yeah, I mean, look, it's had a great year. You're up 40% year to date. New CEO is executing. They have launched 125 new products, and product revenue growth last quarter was 28%. They guided for 25% with margin expansion and free cash flow accelerating. So the story is happening. This new CEO is delivering, more than delivering. It's had a nice run, though, and it's not cheap. So I certainly would not be chasing it right here.
Josh, you sold Starbucks a few months back, but it is on this list. Do you still have any thoughts? Do you still follow the name? What would get you back into it?
I like it. I mean, I was in it on a trade, on a technical trade, but fundamentally, I like it. I think this stock's been consolidating for the entirety of the post-pandemic period. They've had two major overhangs. One was inflation and getting the pricing right, and then the other was China. The inflation thing, I think they can get through a little bit easier. The overhang of China and whether that's still going to be a growth engine or not is still an open question. But they have the right CEO. I think he's going to figure it out. I like the name fundamentally. I'm just not in it right now.
Okay, we'll take a break. We'll come back and we'll do finals next. Josh Brown, what's your final?
Amazon. Mark Mahaney just took his target to 280. I think he's going to be right.
Is that you too?
Second day in a row. Amazon, yeah. I'll give you another one, American Express. I agree with Josh on Amazon and American Express.
It was not the second day in a row. Yesterday was bad.
Yeah, yesterday was bad. Mercado Libre. It was the other day that I had I had the same one.
Sorry to bring it up.
Yeah.
Farmer Jim, I spread the pain.
Citigroup, 13% more until it gets to tangible book value.
Okay, and Steph, must be Chipotle.
Chipotle, new products are coming.
All right, good stuff. Thanks, everybody. I'll see you on the bell.
Hello and welcome to the technical analysis segment of this video where we're going to take a look at some of the stocks that were talked about on the halftime report earlier today. In fact, there's about 19 stocks and ETFs that we're going to look at. My name is George. This is Blue Cloud Trading. We're also going to take a look at some of these, the SPY, the QQQ, the Dow, the Russell 2000, the VIX, as well as some of the Mag 7 stocks and some requests from our members. And before we get started, I want to just tell you guys what happened today in the markets. I mean, it's currently 6:04 p.m. It's Tuesday, July 1st. And you can see the Dow was actually up 0.91% there. It had a nice move up in the morning, but then it kind of stayed stable between 12 p.m. and 4 p.m., as you can see right there. The NASDAQ was actually down 0.82%, so the technology stocks didn't do as well today. They gapped down in the morning, dropped some more at 11 a.m., and then they recovered a little bit of that drop. The S&P 500 was down just 0.11%, and the Russell 2000 was actually up 1.03%. But what you'll notice here is after that move up around 11 a.m., it started to decline towards the in the afternoon there, right? So let's look at the heat map too, and you can see that the some of the big stocks like Nvidia was down 2.97%, Tesla down 5.34%. So there's a lot of risk here now. I don't know if you guys heard the recent news. Donald Trump is now, he was asked by a reporter if he's considering deporting Elon Musk, because Elon Musk is coming out against him right now. So that could have a huge impact on the stock, especially if things start to get more out of hand. I think this rivalry that they now have developed is gonna turn very sour. It's gonna get really interesting, and the stock is going to be affected as a result of that, right? So we have to we'll pay attention to that. But basically, Tesla was down 5.34%. Meta was down 2.56%. Netflix down 3.4%. And it looks to me like the healthcare stocks were up quite a bit here. You can see that. Basic materials also. A lot of the energy stocks were up today. And if we look at the sectors, we can do that. Individual sectors. Basic materials, healthcare, consumer defenses were the top three. Technology down 1.09. Communication services down 1.05. But if you look at the 1 week performance, communication services is at the top at 2.66%. Real estate was down 1.24. So, yeah, let's take a look now. We'll start off with the index ETFs here, and then we'll take a look at the stocks that they talked about. Josh Brown's favorite stocks, as well as some of the other guests, their final trades. We're going to look at those. So let's start off with the SPY, because that's important. We need to know what the overall S&P 500 is doing. And we are still holding up above that prior high right there of 613.23. We're at 617.65 right now. You can see that since we broke through, we are holding ground above that level. That's really important. And the ADX is still moving up. That represents the momentum. Okay. That white line that you see there, we still have the green line above the red line, although the green line did decline a little bit today. So that's it's not that big of a deal, but because it can quickly recover. But my point is that there was weakness, obviously. You can see that down 0.03% here. The QQQ ETF also declined 0.84%. The ADX actually stabilized. Instead of moving up, it kind of went sideways. So this is pulling back. Maybe it's going to retest that 540.81 level. To get to that level, it's another 1%. So we might see another drop a little bit more tomorrow. And then maybe we'll see a pop-up, potentially. We'll see. The Dow Jones today was up 0.96%. So that is, as I mentioned, this was looking really good because it was starting to now move towards the 451.34 level. That's the next target area. Unlike the Qs and the SPY, the Dow has a lot of work to do still. It still needs to take out these highs here, the 451.34 level. So that's where I think it's heading. We'll see if I'm correct about that. Tomorrow it should go up some more based on the momentum that I'm seeing right here. You can see that with the directional movement index and just the price movement alone. So the demand is coming into this into the Dow right now. Volume is also increasing. Russell 2000 had a good day today. Okay, it was up 1.03%. So remember, I was talking about how the Russell was stalling at this 200-day moving average yesterday, and the day before, and the day before that. It just kept on, finding resistance at that dotted yellow line, which is the 200. Now that is, it's a very strong level of resistance when price is underneath it. The fact that it broke through is a big deal. ADX is moving up. So it's interesting. I'm not quite sure what's causing the Russell to maybe it was just, it's time to people they saw that the NASDAQ and the technology stocks were dropping, so they just put their money into the Russell, which has been beaten down for a while. I mean, the highs here for the Russell is 244.98. We're about 11.22% away. But we are currently, even in the Russell 2000, we are, in fact, this is an old note. Let me get rid of that. Still on the daily chart, we are still in this little uptrend that you see right here on the daily. Let's look at the weekly chart real quick. See how it's okay, it was stalling inside under the cloud there. Today it got into the cloud, but it's still not looking ultra bullish. We still have a bearish future cloud here. That's when the lighter colored blue line is under the purple line. So that's the Senko span A and the Senko span B. So that's bearish. But we do have a positive crossover. The green line crossed above the red line. The 9 period crossed above the 26 period. And on the weekly chart, price is in fact above the 200-day moving average. So, you know, we're getting conflicting information on the 2 time frames. And so we'll see what happens tomorrow. The VIX was up just slightly, 0.6%. It was a pretty dull day today in the markets. Nothing major happening. FEZ, the Euro Stocks 50, it just kind of stuck in this little consolidation right here for these last 3 days. What I don't like about the Euro Stocks is the fact that we had a recent crossover, the faster moving average crossing under the slower one. But otherwise, it's still it still has potential to break through if we get some positive news soon. Now let's get into the stocks that they talked about on the CNBC show halftime report. And I've got them all sort of, I've got the ones that are labeled here with a little blue flag. Those are I suppose have the best technicals, and maybe the ones down below, you know, not as strong as the ones above. All right, so let's look at XLK. That's the technology ETF. Even though it was down 0.89% today, you can see that all of the elements of the indicator, Ichimoku, or as Donald Trump would call it, Ichimoku, is all in alignment, meaning the price is above the Tenkan-sen. Okay, the Tenkan-sen, the green line is above the red line. That's what you want. The Chiku span, the white line that you see there, that's the closing price projected 26 periods ago, right there. That white line is above the candle 26 periods ago, so that's bullish. We've got Senko span A above the Senko span B. So when you have all of these things happening, it's telling us this is a strong trend, something, you know, that you can feel comfortable about holding a position in. On the weekly chart, we recently broke through these levels here, these resistance levels of 241.88. So yeah, it's still moving in a nice uptrend here. I like what I'm seeing with XLK. SNOW, which is snowflake, right? SNOW is the ticker symbol. And now today it was down 3.49%. This is the weekly chart we're looking at. So the weekly chart still looks good. On the daily chart, it pulled back and got a little bit under the Tenkan in the 9 period. That might be just a brief little drop there. But I am concerned about something with Snowflake. You'll notice that there's the negative DI 9 is crossing the positive DI. This is the first time in a while. This is a daily chart we're looking at. So let's go back in time and we can see the last time that happened was actually back here in April 17th, 2025. Now it was a short-lived little pullback there, and then once the green line got above right there on that candle, you can see that it moved up approximately 46.5% in 2.3 months. When the red line is above the green line, it's usually very bearish. And as you can see that, like if we go back in time here, back to February 19th, and we measure that drop to the point where the green line started moving up, that right there is a 21.4% drop. It had dropped as low as 35% though at one point. So Snowflake is still in a strong uptrend on the daily and on the weekly, but I don't like today's action, obviously. It's not something I would be adding a position in based on today's action. MTUM, Momentum ETF, down 1.46%, but still holding up above the moving averages on the daily and still strong on the weekly. Financials, XLF, looking good still. However, did it break through that level? 56, yes it did, by 3 pennies. So the financials broke this prior high from March 3rd, 2025. That's important. That's important that it happened. It didn't happen on really high volume though. It's lower volume today than the prior day on Monday. And you'll see there's a little tiny little wick that's protruding right above the 52.63 level. That means that there was a little bit of selling happening towards the end of the day. I'll show you the 3-minute. You can see that selling happening there. So it kind of, you know, it's a break above, but it's not a conclusive break in my opinion. But I do like what I'm seeing here with the directional movement index and on the weekly chart. You also want to hold off, I think, until Friday. I'm not Friday. Thursday. Friday, the market's closed, right? And on Thursday, it's going to be like a half a day. So I think the market closes around 1 p.m. on Thursday. So that's what I'd be watching to see if it can stay above that 52.63 level, because it could pull back. You never know. XLY is on the weekly chart, looks pretty bullish. We got a recent, this is a consumer discretionary sector. We had a recent crossover, the Tenkan-sen above the Kijun-sen. That's really good. And the same thing happened with the cloud itself. Senkou Span A crossed above Senkou Span B. The Chikou Span, however, that's the closing price, projected 26 periods ago, is still under the candle. So that is the only thing that's not looking that great here on the weekly. On the daily chart, however, it is above the candles. So it's not the perfect chart for both time frames, but it's pretty good. I like this. Now it looks like it's also stuck a little bit on the daily chart here in this consolidation stage. You can see that little box that's formed here. So ideally you want to see it break conclusively above that level. That's what I'd be waiting for. All right. EEM, emerging markets. Weekly chart, strong. Okay. Daily, strong uptrend. I like it. American Express, also very strong here in the daily chart, but it's coming close to 326.27, a prior high. Once it breaks that, we'll have all-time highs for American Express. And it's very close, so this is not the time to be adding. I'd wait personally. It's about 2% away from that resistance level. Capital One Financial on the daily chart has broken that prior high right there. You can see that 210 level right there. That's been broken, so it's still moving up. It looks good on the daily and on the weekly chart. It looks good too. Hilton. I had a position in this back in February for just like 5 days or so. Let's look at the daily chart there so we can look at that trade. I made a 7.2% profit there. Now, interestingly enough, you can see that little reversal candle that formed there. That led to a big drop, that candle. I got lucky in exiting my position right there, because look at the drop that occurred right after. It was a 25.9% drop. Now, since that point, we had the crossover, positive crossover, price broke into the cloud, got above it here on the daily, and it's been moving up ever since. So it's had a nice run up, but it's very close to that resistance level of 275.22. It's only 2% away. So I put an alert. One of the cool things about this platform, TC2000, I can draw a horizontal level, right click, hit the set alert, okay? And when price crosses that line, all right, I'll get an alert on my phone, a text message, an email. It will even do a pop-up on the TC2000. So very cool feature of TC2000. And it's really easy to add these alerts. You can have a lot of them. You can have up to 100 alerts with the gold service that they offer, TC2000, and you can have up to 1,000 alerts with the platinum. So to access that real quick, you go here to my homepage, Blue Cloud Trading, hit the 9 more links button right there, scroll down, and you can even get a $25 coupon through this affiliate link for the software. You click on that little link there. You'll see here, yes, you will receive a $25 coupon towards your TC2000 service. You enter your email here, and then you can basically download it for Windows or for Mac here, and then hit the pricing there, find out about that info, and there it is, the costs. And if you click on monthly, you can see it's $29.99 for the gold. This is the service level that I would recommend if you want to be able to draw on your charts and get those 100 alerts. You won't get them under the silver plan, and you won't be able to draw on your charts either. So there's a lot of features there. Once you get to the platinum level, which is a bit more per month, you can see you get 1,000 alerts. You can have up to $300 discount per year with your brokerage account. You can open a brokerage account through them. And so, yeah, anyway, let's keep going here, folks. So, we talked about Hilton. Let's talk about Starbucks. Josh Brown's final trade back on February 25th and March 18th. And I think can't remember what he said exactly about Starbucks, but I think he likes this one. Now, the problem with Starbucks right now at this particular moment is the fact that it is stalling at the 200. Happened right there, pulled back. Happening again right now today. It was up 3.59%. You'd think, hey, maybe this is the time to add a position. And if it wasn't for that, if it was not for that 200-day moving average, I'd say, yeah, it looks pretty good in the daily chart. All the elements of Ichimoku look good. But the fact that it's stalling right there tells me no, not quite yet. Maybe wait until it breaks through that 200. Personally, that's what I'd be doing. Here's a weekly chart also. You don't have confluence or basically, confirmation that the weekly chart is bullish yet with Starbucks. I mean, it has been moving up for the last, it's been moving up, but it's also stalling around that 200-day on the weekly chart and the Kijinsen. The red line is the 26 period moving average. So I'd hold off. You have a bearish cloud here still on the weekly. Yeah. EXPE is Expedia Inc. And this one on the weekly chart popped above the 26 period. Not all of the elements are looking perfect yet here on the weekly, though. So you'll notice that the Chiku span is under the price. The faster moving average is under the slower one. Okay, we don't have all the things there. And on the daily time frame, it is looking good. Now, this one, on the other hand, did break through that 200. And it happened with a nice big candle there with high volume. The positive DI is above the negative DI. This is still flat a little bit, but overall, I like what I'm seeing on the daily chart. But when you don't have, all the confirmations on the weekly, I don't know. You're taking a little bit more of a gamble, basically. All right, let's keep going. Since there are other stocks, doesn't it make more sense to have positions in stocks that are strong in both time frames? You'll just have a higher success ratio in your trades. AppLovin on the weekly is under the Kijinsen, so that's not ready quite yet. And on the daily chart, it's under the Kijinsen there and the Tenkan-sen, but it might find some support. Okay, it was down 3.82%. What about Merck and Company healthcare sector? It was a good day for it. It was up 3.35%. It broke through this level. No, it did not. It didn't even break through that little high right there, as you can see. But we do have a series of higher highs and higher lows. So we broke this prior high there. So we have a higher high. We have a higher low here from the prior low. But we're inside the cloud on the daily chart. So I wouldn't be touching that one. It's still in a down slope here in the 200. So it's not ready. General Motors. Big day today for General Motors. It was up 5.73%. Higher volume than the prior day. It actually closed above this little high right here. But what does it look like on the weekly? Because this thing has been depressed for a bit. Let's look at the weekly. Yes, we recently broke through a level of resistance. If we draw a trend line across the board right there, you can see we broke through that there. But it's still in the cloud. So personally, I wouldn't be adding that one. US dollar has been dropping for quite a bit, down 0.04%. This is the weekly chart. Broke through this low. It's down at around 26.87 now. And here's the daily chart. Not looking that good. USB is US Bank Corp, Banks Regional. This one is broken through on the daily chart above the 200, up 2.74%. And on the weekly chart, it's still inside the cloud. So it's a no-go for me. Lululemon under the cloud on the weekly. I would skip this one. Brian Belsky's final trade back on June 27th. Now it's moved up a little bit since this 226 level. Here's the daily chart on that one too. But you're taking a chance here. This isn't a downtrend. DHI is or a bigger chance. You're always taking a chance when you're placing trades in the stock market. The question is, okay, do you want to be adding positions to a stock that has obviously been in a decline, or are you looking for a stock that's maybe emerging out of a downtrend? And there's going to be different steps that it's going to go through. For example, like over here with DR Horton, DHI, you can see it's been finding some support here at the 200-day moving average. And if we're looking at the weekly chart right now, you can see that, okay, for the last 5 weeks, it's been moving up. But it is still, very close to the Kijinsen. The faster moving averages, it's still in a decline here. we're still under the cloud. On the daily chart, it probably looks more bullish, because right now you can see it's broken through. So it's up to you to determine also what time frame you want to. If you just want to use the daily, you can do that. Personally, I don't do that. I like to look at both time frames. And the stocks that I recommend to members in the members only videos are stocks that I've pre-qualified that look, excellent on both the weekly and daily time frames. That's really important. CMG, Chipotle Mexican Grill, on the daily chart looks good. You can see it broke through the 200 for 2 days now. So that's taking off. That was, I think, Stephanie Link's final trade, if I remember correctly. But it's in a downward channel. Okay, if you look at the daily and if you look at the weekly chart here, we got a lower high here from the prior high, and it's inside the cloud. So this is another stock I wouldn't be adding personally. All right, now let's get into the Mag 7, the ones that I don't have in my portfolio. Google is inside the cloud. Okay, down 0.22%. I wouldn't be jumping in there. Here's a daily chart for you. Okay, pulled back a little bit. Tesla, gap down under the 200. Found support at 294.86. That's a weekly level based on, let me see here, going back a little bit. See these candles right here? This go back all the way to April 28th, 2025. So it dropped, and now what we have essentially is, this is not good. This is not good for Tesla because now we have, I'm going to rearrange this. What we have is a lower high here. Okay. Right there. That's a lower high from the prior high. If it breaks through, let's throw in a horizontal level. This low here is 273.21. If it breaks under that, you're going to have basically a lower high, lower low situation. And in this case, it wouldn't be considered a bear flag because these are large. This is not a short-lived drop here. Okay, bear flags, like gold, for example. All right, I'll show you that in a little bit. But Amazon, they tend to be a little. I'll show you what the pattern looks like real quick here. Hold on. This is a bull flag. Okay, you might have, for example, price dropping. You'll have a lower high here and then a lower low, and it will be short-lived. And then price typically, if it breaks through the high, okay, then that's very bullish. Now Tesla was kind of looking like it was developing that a little bit right here, but then it because it did break that trend line from here to that level. See that little trend line that was broken, and then it got back under it now. So you can see right here the candle's under. So that candle is no longer, I'm sorry, that trend line is no longer something that's referenceable. Okay. So right now we got a bullish spinning top, a single pattern, and that is, so there's a potential for it to go up tomorrow. There's a bullish spinning top. The upper wick and lower wick are about the same length, and there's a small bullish body. When you see that happen after a pullback, there's a little bit of buying that started happening here towards the end of the day. But, the fact that it's inside the cloud, I wouldn't be touching this here. Notice also down below the directional movement index is very negative. All right. So, yeah, he's, even though he helped Donald Trump become elected, spent over $200 million, right, for the election, it's going to end up not being such a good situation right now because he's getting targeted. So Tesla as a company, okay, it can get really bad. I'm just saying, we don't know exactly what level where they get, he's obviously you guys have been reading, I'm guessing you guys have been reading the news about what's going on between the two of them. Amazon. Let's see here. Josh Brown's final trade today, and it was also his final trade on June 26th. Here's the weekly chart. Looking pretty good. I mentioned this yesterday. I said, yeah, I'm just becoming more and more open to the idea of adding Amazon to my portfolio, but I haven't pulled the trigger quite yet. It did break through that 218.40 level, and then it dropped, and now we've got a spinning top. Maybe it's just going to build a little base here first, and we'll see if I add it. I don't, the volume is coming out a little bit. You can see that right down here. I don't know. It's just not super bullish at this point quite yet. All right, and then Apple had an update today. It was up 1.29%. Yesterday it broke through the cloud. It moved up, found that 208.42 level, and it goes back to that level right there, that low, and then dropped. So it created a shooting star candle. That's a reversal candle, and I'll show you guys what that looks like here. Long wick on the top, small body. That's negative. Now it was a bullish color, but it's still a long wick. That represents selling happening at the end of the day. If I switch it from daily to 5-minute, there's the move up, and then you can see from that point it reached $210 around 11:10 a.m. and then dropped about 1.12% the rest of the day. So nothing to get too excited about there. And don't forget, just because it broke through the cloud on the daily chart, if we look at the weekly chart, it's still in very, very negative territory here. It's under the cloud. Okay, and then we've got a couple of stocks from, actually this one's a mutual fund. So one of the cool things about TC2000 is you can also check mutual funds in here. Here's Fidelity International Real Estate Fund. This was requested from one of our members for me to do analysis on it. And so let's take a look at this. Now this here reached that $10.47 level. I mean, very close to it. Today it was at 10.44. This is a weekly chart we're looking at. So that it goes back to September 27th, 2024. It stalled. It developed that tiny little candle that you see that right there. So this might be, this is the International Real Estate Fund. And, overall, if you look at the daily chart, it looks pretty good. An interesting thing I should mention about the why you're seeing a line and you're not seeing Japanese candlesticks here. When it comes to mutual funds, this is what it's going to look like. So that little blue line that you see right there is going to be the price. Okay? There's the Tenkan-sen. There's the Kijun-sen. It's just on the mutual funds that it shows up that way. So here's the weekly again. I would not be adding here, but if it breaks and closes above 1047, then you're going to have confirmation that this thing is going to probably continue. I see another level of resistance right there, though. I should probably throw that in there. Right there. The high is 1089. So that is probably your next level to look for. And that's about 4% away. So that could be another target. The 200-day moving average on the weekly has been declining, but it is above it. So, yeah, I mean, it's looking pretty good. It looks good. Real estate in the U.S. not doing as great. Obviously, if we look at XLRE, for example, here's the weekly chart. It's inside the cloud. On the daily chart, just kind of stagnant. But internationally, yeah, there's a lot of buying happening in other countries. KT Corporation, communication services, telecom service industry. On the weekly chart this week, as you can see right here, it popped. So it's up 2.55%. Let's look at the daily chart. 2 days in a row where we have these little gap ups, but we are also forming these on the daily chart, these little reversal candles, spinning tops. This is interesting when something like this happens. So here's the thing. I mean, this might, what I would be watching to see is if price gets under the low of that candle, it might pull back and then retest the Tenkan-sen or maybe the 2028 level and then bounce off of that and continue its move up. Overall, I like what I'm seeing. I mean, we're hitting all-time highs. This is a very strong uptrend. There's a lot of demand for this stock, obviously. And it was stuck in this little area here since May. Okay, since May 2nd. And now we're above it. July 1st. Okay, that's going to do it for this video. if you guys want to help support this channel, one way you can do it is by subscribing. Hit the subscribe button. If you want to go once, and that's free, by the way. If you want to go one step further, and maybe you want to get access to the portfolio that I have, where I share my entire portfolio every weekend. I go over all the stocks, all the trades that I've placed throughout the week. Okay, you become a Blue Cloud Trader member. So once you've subscribed, there's a plus sign that will pop up, and you click on the plus sign there, and you'll see that there are 3 tiers here for joining Blue Cloud Trading. You'd have to become a Blue Cloud Trader to access those member videos. And if you want even more information, you go to Blue Cloud Legend. Okay, what do you get under this level membership? Daily trade updates. I also have I have like day trading videos there that you can also view that are not on the Blue Cloud Trader. So the daily trade updates I post each day. And once you've become a member, there'll be a new little tab that pops up next to posts here. This is what it's going to look like. It'll say membership. You'll click there, and you can see the posts that I placed. So today, for example, I usually try to place the posts between 3 p.m. and 4 p.m. every day, so before the market closes. And so yeah, if you're interested in that, consider becoming a member. You can also hit the join button down here. If you scroll down here, you can see that join button. That's another way to do it. And you can scroll down, you can find those videos right there. There's a lot of videos. So, all right, guys, that's going to do it for this video. Thanks for watching. I will catch you all in the next one.